love the channel and find it useful in becoming a happy retiree. Subscribe today. Brenda, good morning. Welcome to Money Matters. What's going on? How can we help?
Yes, good morning. I have a Vanguard Target 2025 mutual fund, Roth, in a Roth. And since the rates are going up, the interest rates, I was wondering if it would be a good idea to buy the Vanguard Inflation Protection Fund and insert it in my Roth alongside of my Target fund.
Okay, so you're thinking about inflation here, and which is certainly an important piece of the equation. If I go to Vanguard's Target 2020 fund, and I like Vanguard Target funds, and you've got to understand it's not so much about the year, because T. Rowe Price's version of a 2025 might be different than Fidelity's version of 2025, which might be different from Vanguard's version of a 2025. So it's not just about that year, Barbara or Brenda. It's all about what's inside of that account. So you've got to go and look, hey, well, this particular target fund has 65% in stocks and 35% in bonds. And what makes up that? Different Vanguard funds are the components that make up that asset allocation. And I think that for a lot of investors, Brenda, these target funds are a good idea. The only worry I have is that they sometimes will have and again, this depends on which company, which investment company. They have a lot of exposure to international. And this is another example of that. This has 39% in U.S. and it's got 26% of your assets in international. And that's a pretty significant number. So I think that that's a consideration. But what you're thinking about here, you're thinking about, hey, what if I look at the Vanguard Treasury Inflation Protected Fund? Right. You're talking about TIPS. And I think TIPS they're really a small part of the bond market. It's a fraction of what's happening in the bond market. However, these are backed by the Treasury. They have an incredible amount of safety baked into them, because they're just like a Treasury bond, bill, or note, a Treasury inflation protected security. It's guaranteed by the government. So as long as you hold these to maturity, you're going to get your money back. The problem we have right now is that so far inflation has not really kicked in yet. Now remember, the Federal Reserve is watching inflation really closely, Brenda. You've got they want to see inflation at 2%. It's not there yet. It's still not there yet. But the good thing about a tip is that when it does get there, and this is my thought on tips, you want to buy them when inflation is low, headed higher, not the other way around. What we don't want to do is buy tips when inflation is at 3 or 3.5%, headed down to 1. The environment that we're in today is that inflation is likely headed higher. So I do think for investors, tips are a decent idea. And Vanguard is the kind of company that has a very broadly diversified fund that does tips. So and again, remember, the way this works is you effectively get your money back plus whatever inflation is. So if you have a year where there's no inflation, you're not going to get any interest. If you wait though and hold tips and inflation finally does arrive and we get a 3 or 4% inflation year, it's going to be really good for those investments. So I think if you're considering to add to the bond part of your portfolio, Brenda, tips, this is probably a good time to be looking at tips. And add that in addition to what you're doing in the Target 2025. Hi, I'm Wes Moss, and thanks for taking a minute to hear about what's so different about my new book, You Can Retire Sooner Than You Think. So unlike other retirement books, this book will give you a step-by-step guide, whether you're in your 20s or 30s or 40s or 50s, to learn from what these successful and happy retirees did to get there. I hope you enjoy the book, but more importantly, I know that it'll help you retire sooner than you think.